Members of the FDNY ringing the opening bell at the New York Stock Exchange yesterday, but not even firefighters could put out the proverbial fire that burned for nearly a week on Wall Street.
Very funny. Today, it wasn't a fire hose, rather the president's pause that quickly extinguished the flames as soon as the reciprocal tariffs were actually paused. The markets just shot up after that. Look at that.
Yeah, they did. Eyewitness News anchor Mike Marza live on Wall Street with more on the market whiplash and how it impacts all of us. Mike?
Talking to a couple of traders, Bill and Sade, today, and they say, wow, what just happened? Much different than what we saw yesterday. In fact, we've been watching these gains throughout the day, especially in the afternoon. The Dow seeing its biggest one-day rally since 2008. So how did we get here? Not just the past 5 days, but taking a look at the Dow all the way back in February when President Trump first announced those 10% initial tariffs on China. And then you see the trend. And then if you focus at the end of that chart, you see the last 5 days. Let's go to the S&P 500. That is a look ever since so-called Liberation Day. You see the ups and downs, but mostly down. And then the NASDAQ, the same sort of story the past week. So if you are one of the fortunate people out there to have a retirement account, you've been watching your own charts and your own numbers thinking, what do I do here? Eyewitness News reporter Tanya Rivero with some answers tonight.
Will I ever retire? That's the question.
55-year-old Tommy Liakos says the recent 30% hit to his 401k has made retirement an even more distant dream.
Would I like to retire at 65? Sure. I'm an old papa with young kids, so I don't think that's going to happen. I'm just really nervous about the market in the future.
While the small business owner is not yet burying gold bars in his backyard.
I couldn't even tell you how close to the truth you are right now. It's crazy.
He says he has lost all confidence in the stock market. But financial analysts like Caleb Silver say the stock market, long term, is still a good bet, even if this downturn is different.
This is extreme volatility brought on, obviously, by the tariff announcements by the Trump administration that took a lot of people by surprise. I think a lot of economists and strategists said this was much worse than they had anticipated, but eventually stocks in the stock market should revert to the mean.
More than 60% of Americans have money in the stock market, including 2/3 of middle-income families and 1/4 of those with annual incomes below $40,000. So the stakes are high.
If you're close to your retirement, your asset allocation shouldn't be as aggressive as what it would take to keep you awake at night. Long-term investors, people that are not retiring in 15 minutes but in 15 years, should feel comfortable with this, that volatility in the equity market is something like the price you pay for the higher annualized returns over time versus bonds.
Tax strategist Lorraine Millington preaches nest egg diversification for every age.
When you invest in something like an IRA, you're able to invest in real estate or notes, right, that have the security of a hard asset.
Advice Liakos says he follows, slowly shifting his savings into gold and silver.
I'm a pirate. What are you going to do?
Again, financial advisors caution with this volatility, now is not the time to make major moves with your 401k. If you get nervous, it is worth remembering after every major downturn in the market, the S&P 500 has come back to reach record highs. In the financial district, Tanya Rivero, Channel 7, Eyewitness News.
Our thanks to Tanya for that look at what you could possibly do in this environment. And even though the S&P and the Dow both soared today, they are still down almost 4% since that so-called Liberation Day, which was, by the way, just last week when President Trump announced those tariffs. So what happens now? Well, tomorrow we are expecting an inflation report. We'll see how investors respond to that.